Hello traders, welcome to Quantsapp. In this session, we're gonna understand how you can use Bollinger Bands and identify intraday resistance and support, and with that, how you can trade accordingly. Now, if you're new here, subscribe to our channel, and if you're new to Quantsapp, you can sign up now. I'll put up the link in the description. As you'll sign up, you will unlock 20 plus free tools which will help you in your option trading journey. Now, if you want to know what is Quantsapp, what kind of tools Quantsapp is providing, you can come here in the learn section and you can go in the video library and you can check out the videos which will help you regarding the same. Now, further, if you are having any doubts or queries, you can come here at the support section. You can write us, you can WhatsApp us, and we'll try to help you out. Now, let's jump on to the topic and understand what is Bollinger Bands, how does it help us identify these levels, and how does it help us identify a significant trade. Now, we'll go on the board and we'll just understand, okay, how you can use Bollinger Bands, okay. So Bollinger Bands, okay. So what is Bollinger Bands actually? So what you're doing here in Bollinger Band is that initially you are having a MA, okay. So there is an MA which is there in the center. So let's just suppose this is the price levels, okay. So let's just suppose the price is crossing here, price is here, like this. So obviously there will be a moving average, okay. Just a second. Wait. So let's just suppose this is the moving average which you can see, okay. So now this moving average is taken into consideration for your average price, and you can trade accordingly if the average price is crossing above, average price is crossing down. But what does Bollinger Band do is that it is taking a standard deviation now, okay. So it is taking a standard deviation of this MA, okay. So standard deviation it is taking, and it will help you identify the deviation of price. Okay, now if you have been understanding, or if you must be thinking that what is the deviation. So let's just suppose the price is currently Nifty is trading at around 25,000. Okay, let's just suppose, and it has gone to 25,400 or 300. So we are seeing the price is increasing. Okay, so that is the deviation of the price which you are identifying, right? So this will help you identify the deviation with the help of standard deviation. So generally, if we talk about the parameters, generally the MA is 12 and the standard deviation is 2. So 2 standard deviation above the moving average. Okay, so 2 standard deviation above the moving average and 2 standard deviation below the moving average. Okay, just a second, I'll just change the colors. Okay, so 2 standard deviation above and 2 standard deviation below. So this is the bands which you can see, which will be identified by the Bollinger. Okay, so Bollinger Bands will help you identify that if on a normal conditions, you will see the price will move in this range only. And whenever the range is being broken, there you can see a momentum. Or whenever the range is broken on the below, you can see a momentum. Now, how does this help us identify a trade? So whenever you are seeing if the Bollinger Band is being broken down here on the lower half, so that is indicating you that somewhere the market is oversold. Okay, so there is a lot of selling which has happened at this particular point, and from here we can see a reversal. Similarly, if it is broken on the upper level, you can see the overbought zone. Okay, so this way Bollinger Bands help us identify until and unless the market is in range, there is no trade being executed for you, there is no trade initiation, or there is no point where you can make an entry. But as it breaks out on either of the side, that will be the point where you can indicate and you can take a momentum and you can take a trade. Now, what we'll do is we'll simply go on the chart and we'll just deploy the particular indicator and see how does it work. We'll go on the analyze chart order trade. You can see I've put Nifty. So I'll just remove the indicators, extra indicators. Okay, we'll just, okay. Yeah. Okay, I'll simply just put Bollinger Bands now. Okay, so as you can see, the Bollinger Band is deployed. As I was telling you that you can see that, just a second. So as you can see, there is a MA in between. Okay, so there's a moving average and we are taking the standard deviation on the upper side and the lower side, and we are indicating some kind of a momentum with this. Now, as you can see, if we just see the settings before, okay, so if I just put, you can see the settings. Generally the length is 20 and the standard deviation is 2. Okay, so if you want, you can just change the color of the style. If you want, you can keep the resistance as red, or you can keep the resistance as red and support as green. So this will help you identify, and we'll put the MA in the blue color. Okay, so this way it will be more easier for you to understand. Okay, now simply what you can see here is that this is the Bollinger Band what we are seeing for today. Okay, so if we see today's range, okay, this is today's range. Now if we need to identify a trade, what you need to see is that initially when the market opened, what you are seeing is the price was, now what you can see is that whenever, as I said, that in the Bollinger Band, the upper part is the resistance zone and the lower part is the support zone. Now you can see it has touched the resistance and from there it has gone on the downward side. Okay, now again if you see that it was oscillating in the zone only. Okay, now what we have seen that it has broken out the resistance. Okay, so as I said, whenever there is a breakout on the resistance side, that is indicating you that somewhere we are here overbought. So whenever the market is overbought, what kind of indications do you take? On the bearish side. Now what will be your point of trade initiation? Okay, so how will you initiate your trade? So initially when the breakout candle is there, after that you need a red candle for the bearish side. Okay, so red candle, or your price should retrace, and on the basis if the low is broken by the next candle, preceding candle, you can take a trade. So as you can see, there is a red candle indicating you. Okay, so we'll just a second, I'll just zoom in here. Okay, so you can have a clear picture. So you can see that it has broken out here and then we are seeing the prices retracing. So this low will be your indication for your entry point, on the basis that here we are having an overbought zone. This is the overbought zone. Oh, sorry, just a second. Yeah. So this is an overbought zone, and from here, this point you can initiate your trade, and from here, as you can see, the downward momentum which you can make. Okay. So your entry point is here, and when will you exit? So your exit point will also be where the Bollinger Band is being broken on the lower side. So again, if the price has crossed this area and now it has broken the support area or the Bollinger Band on the lower side, so this is where you can take an exit. Okay, so if I put just another indicator, okay, so it's not necessary that you use only one indicator. You can use multiple indicators for the comparison. Okay, and you can take multiple indications, because see, again, if you use one indicator, sometimes you can make losses also. So it is always preferable to take another confirmation. You can take 2, 3, 4 and unlimited confirmations and then initiate your trade. So this way you can use the Bollinger Bands and initiate trade. Now again, if we just come here, okay, now we'll move forward. As you can see that we'll just change the time frame to a higher time frame. Let's just suppose 3 minutes, or 3 minutes is decent. So 3 minutes, you can see there is one more indication you can take from Bollinger Bands, is that whenever the Bollinger Bands are contracting, that is indicating you that somewhere the price is consolidating, and from there you can see a momentum. Okay, so this is a hack, do keep that in mind. So you can see the Bollinger Bands were starting to consolidate. Okay, so you can see whenever the Bollinger Bands are consolidating, you can see a momentum comes. Okay, again whenever the Bollinger Band is consolidating, you can see a momentum. So this way you can identify momentums. So when you see here, okay, now as I said that now the support zone is broken. Okay, just a second. So I'll just, yeah. So as you can see here that what is happened here is that we are in a oversold zone here. Okay, so we are in a oversold zone. So now in oversold zone, what is our indication? That you will now go for the long side, because now the market has been already oversold. So as you can see, this high can be your entry point. But again, as I said, you need to take multiple indications, or you can take multiple confirmation. So let's just suppose anywhere you can use your direction. So let's just suppose we'll add another indicator. We'll add MACD. Okay, or you will add MACD and just take an indication. Okay, so if you want to know about MACD, I'll just put up the link in the end of the video. You can go watch that video to understand how MACD works. Okay, now other than that, you can see that wherever you are seeing a converging. Okay, so in the MACD also you can take a confirmation. So as you can see here, we were on the oversold zone. Okay, and at the oversold zone you can see the MA is crossing below, and then after that it is converging here. So this is the point of entry which you can take on the basis of the Bollinger and on the basis of the MACD. And as you can see from here, you can see the momentum which you got. And again, as I said, if the band is broken, you can take your exits at the basis of the resistance levels. Okay, so this way you can use Bollinger Bands. Okay, so as I said, 2-3 indications you can take from Bollinger Band is that initially you can identify the support zones and the resistance zones, but just keep the maximum time which you can take is 15 minutes. Okay, don't go above that for the intraday kind of a setup. Okay, because see, again in the 15-minute time frame you can see it clearly that whenever the price had crossed here, okay, so whenever the price got in the overbought zone, whenever the price came in the overbought zone, you can see there is an entry here also. You can make an entry on the basis that the low is broken. So this low should be broken. You can see somewhere at this candle, you can see the low is broken, and from there you could have taken a trade. And your exit point is where the support zone is broken. So you don't need to go for a specific target. You don't need to go for some other indications to help you take an exit. Your exit can be simply wherever the support zone is being broken. Now your next trade would have come where here when you are seeing that we are in a oversold zone. So in the oversold zone, what you are seeing is that now from here what we'll see is that the price should retrace. So what we need an indication here is that one green candle. So as you can see, there is a green candle here. We are again in the zone. Now if we talk about MACD, you can see in the MACD also we are seeing a convergence at similarly at this point only. Okay, so around 12 o'clock we were taking this indication from here, and see now you're getting two confirmations here. Okay, so two confirmations are here already. If you want, you can use another any kind of indicator. You can take super trend, you can identify. Okay, and with this confirmation, as you can see from here, you got a momentum and your target is here. Okay, again your target is being hit, your resistance is broken. Okay, so wherever the resistance is broken, here you can book your profit. Right? So see how simply you can use Bollinger Bands and identify support resistance zones, and with that you can initiate your trades with confirmation and you can get safe trades. Again, see the stop loss here also was minimal. Again, here also your stop loss was minimal. Even if you take entry here, your stop loss is minimal. So stop loss is also minimal. Your targets can be 1:2, 1:3. And on the intraday basis, you can use this indicator and identify good momentums in the market. So you can use this in index and stocks, but your maximum time frame should be 15. So you can use 15, 5, 3 and 1. These can be your, generally these are the particular time frames in which this particular system works the best. So I hope you like this video. If you understood the concept, please press a thumbs up in the comment box. Thank you so much for watching this video. Do like, share and subscribe for more such videos.